Another big week is upon us, guys. We have a lot to go over in this video, from earnings coming up. We have a lot of earnings coming up this week, guys, from big tech to other companies as well. And we have to break down what's coming out on Tuesday, which is the FOMC statement, the press conference, Jerome Powell, all that good stuff. So, yeah, jam-packed video today, guys. We have a lot to go over. But before we do that, don't forget to get your free money from Moomoo, the sponsor of today's video. Up to 16 stocks, each up to $2,000. All you guys have to do is use that link down below, open up your account, fund it with at least $100. You get 5 stocks right off the bat, and if you fund your account at least $1,000, you get 10 more stocks, totaling 15 stocks. And the best part of the promo is if you fund your account at least $5,000 on top of those 15 stocks, you also get a free share of either Tesla stock or Expedia stock, which, guys, this promo is a no-brainer. So use that link down below, and of course, full disclosure, that is an affiliate link. It helps out the channel. I appreciate you all as always. And with that being said, cheers. Let's dive right into the video, break down what stocks I'm looking at, because again, this is a very big week coming up. And actually, before we dive into the stocks that I want to break down more in depth in this video, we're going to go over their numbers, their charts. Let me just give you a broad overview of the amount, the sheer amount of companies that are reporting earnings this week. We're not going to talk about all these in depth because, quite honestly, this video would be an hour long if we did do that. But let me just read to you all these earnings coming up this week, guys. It's nuts. So on Monday, we have Dominos Pizza. There's more, but that's the biggest company, I would say, or the most popular, quote unquote, that, you know, maybe retail investors look at. That's on Monday, Domino's Pizza. Then on Tuesday, get ready for this, guys, we have companies like Microsoft, Alphabet, also known as Google, which happens to be my biggest individual, stock holding. It's been for years. We also have Snapchat, Visa, Spotify, Teladoc, Verizon, GM, 3M, right? Which rhymes now that I, think about it. General Electric, they're all on Tuesday. Then on Wednesday, get ready for this, guys. We have Meta, formerly known as Facebook, Chipotle, eBay. We have AT&T, which has gotten destroyed. We have Boeing, which is slowly starting to rebound. We also have Coca-Cola. All of those are on Wednesday. Then on Thursday, we have McDonald's, Enphase, companies like Ford, Intel, Roku, Southwest, MasterCard, or is that MasterCard? Yeah, MasterCard, AbbVie. Then on Friday, we have a lot of energy companies, including ExxonMobil, Chevron. We have Procter & Gamble. So, yeah, guys, we have literally 30 prominent companies, probably more. There's more that I'm not naming, guys. Keep that in mind. Yeah, definitely more that are set to report. And, well, we only have time for 10 of those in this video. So we're going to try and get through them fairly quickly. I don't want to make this video too long. And, of course, before we do that, let me take a quick look at the overall markets, which right now, it's Sunday right now. But as of Friday and as of last week, we did see a bit of a cool-off in the market. SPY hit 456.40 in the middle of the week. That was on Wednesday, right? Then we ended up going down to about 452 at close on Friday. So we did go down about $5, roughly 1%, really nothing, not the end of the world, really nothing at all. Just a little pullback. And Triple Q in that same time period on the 1 hour time frame, let me show you this, guys. It went down a little bit more than 1%, but still not the end of the world. Obviously, the bulls are still, in charge. We're directionally bullish at this point. We have been for quite some time. Triple Q just pulled back $12. Nothing crazy. That is around 3.2%, so about 3 times what the S&P pulled down, and that's because of big tech names like Netflix. You guys probably saw they reported earnings last week. That stock went from $4.95 to $4.25 pretty much. That was a drop of 15%. We also had Tesla on that. On that same day, Wednesday, go down from 300, and then it closed on Friday at about 260. That was a move of 14% down. So this is dragging down the NASDAQ. And of course, as we had Netflix and Tesla go down, the other big tech names started to sell off as well. Not all of them, but a good amount of them. So that ended up dragging down the NASDAQ as well. So that's why that did not do well at all last week, and it's just simply a pullback at the end of the day, guys. Sure, it got hit hard, Triple Q did, on Wednesday, Thursday, Friday, but at the end of the day, like I said, we're still directionally bullish, and it's very obvious. So let's break down these stocks that I'm looking at for this week, and let me know in the comments if you guys want me to do a part 2 video. Again, there's 30 stocks we can talk about, but we're only going to get into 10 in this video. So if you want me to do another one on those other maybe 10, 15, 20 stocks, however many it is, let me know in the comments, and I will make a part 2 to this video. So Domino's Pizza, guys, which I never get anymore, but back in college, back when I was younger, early 20s, man, I was crushing Domino's Pizza maybe once a week at one point, right? Especially during the winter, man, I was crushing Domino's Pizza maybe more than once a week. I don't know, I forget. Maybe a little bit more than I'm willing to admit, guys. I don't know. I'm not gonna lie. But look, Domino's Pizza is set to report on Monday in the morning. So tomorrow morning or this morning, depending on when you're watching this video, the numbers are coming out, and they're looking to do EPS of $3.05, which last year they did $2.82. So year over year, that's projected to grow, and revenue is going to be pretty flat. $1.07 billion is the estimate, and last year, you guessed it, they did $1.07 billion in revenue. So pretty flat there year over year, and this stock ended up shooting up on the 11th of this month. Is there something that I missed? I'm not sure why that happened. Let me scroll down a little bit here and see. Let's see here. Domino's introduces a new way to order using Uber Eats Marketplace. Domino's Pizza announced agreement allowing U.S. customers to order Domino's products through Uber Eats and Postmates apps. So I guess, were they not on there before? I guess they're working out. I mean, obviously they were on there before, but I guess now they're working out some deal where maybe Domino's gets more exposure. I have to look deeper into that. I'm not too sure, guys. This is the first time I'm actually seeing this, but look, they're doing some stuff with Uber Eats, Postmates apps. Those are big food delivery, food service apps. Obviously, you guys have heard of those. So that shot the stock up a lot. And since that point, we've been flat for the past roughly 2 weeks heading into these earnings. So it's kind of like the calm before the storm. I mean, what's going to happen, right, guys? On the 4-hour chart, we are arguably overbought, which isn't the best sign heading into earnings, especially. So let's just say this. If earnings are not that strong, we ran up a ton after that Uber Eats Postmates catalyst, this might fill the gap back down, which might not be the best or worst sign, honestly. That might be healthy, considering that would put us right by the 50 SMA, would shake out a lot of weak hands, and that'd be a drop of around, 7%. Not that crazy. So keep your eyes on Domino's Pizza. Maybe the earnings disappoint, but then again, EPS is growing a good chunk from last year. Sure, revenue's flat, but EPS is strengthening, and we'll see how the stock reacts to it. I don't know, guys. What do you think? Let me know your thoughts in the comments. So Tuesday, we have Microsoft, which is a very important company to watch out for. Of course, you guys know Microsoft, right? Have you heard of Microsoft? I'm curious. Let me know in the comments if you guys. Obviously, everybody's heard of Microsoft. So they're set to report on Tuesday morning, I think, right? Or after the bell. Yeah, they're after the bell. They're always after the bell, guys. And they're looking to do EPS of 255 versus the last year number of 223. So they're going to be up a good chunk year over year on EPS. And Microsoft's looking to do revenue of $55.47 billion versus last year's $51.87 billion. And that is up 7% roughly projected. These are all estimates, guys. Keep that in mind. Up 7% year over year. That's really good, guys. Really good. Considering a lot of these comps for these tech stocks are very difficult. And the fact that Microsoft's growing still. I mean, Jesus, guys, that's really good. So Microsoft is down a good chunk as of the last couple of days, like we saw. Triple Q, Tesla, Netflix, they're all selling off. Microsoft is selling off as well. It's down 6% from the 366 high heading into earnings, and that might not be the worst thing. I mean, it's actually a pretty good setup heading into earnings. We're more oversold now on the 4-hour chart. If earnings, blow it out of the water, this could be setting up for a breakout. We'll see, of course. They're on Tuesday. We have all Monday and, of course, all Tuesday now that I'm thinking about it because they're after the bell. So we have 2 days of trading before the numbers come out. anything could happen. Keep your eyes on Microsoft, guys. And we also have Google this week, guys, my biggest individual stock holding, which ran up a ton after the last report. You guys probably remember that. They reported in the middle of, or the end of April. Yeah, end of April. And the stock was coasting at about 100, 105 for a couple of weeks, guys, heading into that earnings report. Then we got the earnings. The markets kind of digested the earnings for about a week or two. The crazy thing is, look at this. We got the earnings in the end of April, and the stock was flat pretty much till almost the middle of May, so it did nothing for 2 weeks after earnings. Then all of a sudden, it started to really take off, guys. The volume picked up big time, right? Yeah, volume picked up big time, and we ran all the way from 105. We broke 110, and we ran all the way to 130, and that's kind of where we've been chopping it up over the past couple of months. And if you look at it, I mean, nothing's guaranteed, but this is a very similar setup to what we saw last time they reported, right? We were chopping around for a couple of months, or weeks, really. Yeah, it was a couple of weeks. Then we got the numbers. Then we shot up. Now we're chopping up again, or, chopping around. Now we're going to get the numbers on Tuesday. Are we going to run up again and maybe see a push towards the 150s? I mean, you got to realize that's not out of the cards right now, because we've seen a lot of other tech stocks, not saying this is the sole reason, but you have to realize, guys, we're getting close to all-time highs. A lot of other tech stocks are doing very well. They're near all-time highs after, the last couple of weeks. Apple's one of them. That they hit an all-time high. Microsoft's pretty dang close, guys, if not there already. What's the all-time high in Microsoft? Is it like 390? I don't even know. Yeah, no, they're at all-time highs right now. Yeah, this is what I'm talking about, guys. Google is the one that's lagging behind all of these, and it could be getting there anytime soon towards the 150s. I'm telling you, if they kick butt on earnings, which we don't know exactly what's going to happen, but if the similar setup we saw last time plays out again this time that we're seeing right now, guys, this could be going to the moon. I'm not trying to hype it up or anything like that. It's a freaking $1.5 trillion company, almost $2 trillion. But I have conviction in Google, guys, which is why it's my biggest individual stock holding. And all of you out there that have been watching me for a while, you know that. I mention it in the videos, right? That Google is my biggest individual stock holding. That should be of no surprise to anybody out there watching. So Snapchat is also on Tuesday. They're set to do EPS of -4 cents. Last year they did -2 cents, so they're going to be losing even more money this year, it seems like. And it looks like revenue is going to be roughly $1.05 billion versus the $1.11 billion from last year. So that's actually a drop in revenue. Down 5% roughly year over year. Not the best sign there for Snapchat, guys. And it is pulling back a little bit. I mean, you guys can see it's clearly been reversing. I mean, this stock has done extraordinarily well. I mean, now it's up around 62% from the low where it hit 785 back in, when was that? Beginning of May. So it's up a ton. And the uptrend's still holding, and actually this could be a nice setup. But with earnings coming up, guys, and with how volatile especially Snapchat is, out of all these stocks we've talked about, no doubt Snapchat is the most volatile. I'm being very cautious with this one. Even if it pulls back tremendously into the report on Tuesday, you just never know with Snapchat. I mean, this thing, last time they reported, was at $10.30, and a couple days later, it was under $8. I mean, this is that kind of stock. So for me, even if it pulls back and it's setting up beautifully, I'm going to wait till the earnings come out. I do that anyway. I mean, I don't trade through earnings. But it could be tempting sometimes, especially with one like Snapchat. But I'm going to let the numbers come out, and we'll see where it goes from there. Again, we have a lot going on with this company, which we don't have enough time to get into in this video, but keep your eyes on Snapchat. Also, Visa is on Tuesday. They're breaking out. We call this ascending triangle a couple of videos ago. You guys probably remember that. So they're looking to do EPS of $2.11. Last year they did $1.98, so that's good. They're above last year's number. Hopefully, if that estimate comes in, it actually plays out $2.11. And revenue is looking to be $8.06 billion versus the $7.28 billion from last year. So that's also up year over year. That's great. And we'll see if that actually happens, over $8 billion of revenue. That is a good number there for Visa. So like I said, they're breaking out into earnings. And actually, the last couple of days, they've pulled back a little bit from 245 to 239, 240. So it is down 2.5%. But overall, we're above the breakout level, which is 235. You guys can see that was resistance in the beginning of January and February and April heading into May, right? So we broke out of there. We hit 245. Now we're back to about 235, 240. Let's see if buyers come in to take this thing even higher on Visa. I think it could be possible, guys. Could be. Nothing's guaranteed. The keyword is could be in that statement, guys. So, yeah, that's Visa. The next one that I want to go over, which is on Wednesday, is Meta. Let's pull it up and let me show you guys. Meta is actually down a good chunk in the last 3 days alone. It's down from 318 down to about 293. That's an 8% pullback heading into earnings. And now that I'm looking at it, pretty much all these tech stocks are pulling back heading into earnings, which really is not that bad of a sign, at least in my opinion, guys. The last thing I would want is for a stock to be mooning heading into earnings, unless I was going in it as a trade and maybe locking in profits or whatever. In that case, sure, that's great. But, you know, if you see a stock mooning into earnings and, you know, it's super volatile around earnings, then all of a sudden they miss numbers or this or that, and then it craters. It's never a fun time if you're, you know, losing a bunch of money. But we're not going to get into that in this video. So this could be a decent setup. You know, Meta's looking to do, let me see here, EPS of 291. Last year they did 246. So they're going to be growing EPS, which is nice. And the revenue number is $31.12 billion versus, get ready for this, $28.82 billion last year. That's up 8% year over year roughly, which is pretty good. So I'm watching Meta on the dip here, and they're just, I mean, at this point, would I chase it as a long-term investment? No. But as a trade, would I ride it as a trade? For sure, guys. Absolutely. But at this point, it's up over 250% pretty much from the lows, and it's definitely done very well. And maybe it's a little bit frothy, you know, from a long-term perspective. But as a trade, man, this is looking fantastic on the dip. And we have earnings on Wednesday. We'll see. Maybe we can get a move before earnings. And we also have Chipotle on Wednesday, which I love Chipotle, guys. Remember, like I said earlier today, or earlier in this video, you know, Domino's. I used to be a big fan of Domino's in my earlier 20s. Now in my later 20s, I'm a big fan of Chipotle, man. This is a spot that I go to at least once or twice a week. I love it. They have this new chicken. It's called, what the heck is it called? It's called the Al Pastor chicken, something like that. Al Pastor chicken. I think it's a little bit more spicy, which really it's not spicy at all, but it's a little bit spicier, quote unquote, than the regular chicken. Either way, I like it. I've been getting that, and I swear this is not an ad, guys. I'm just a big fan of Chipotle, right? So they're set to report on Wednesday. EPS is looking to be $12.29. Last year it was roughly $9.30, so that's up a lot. $3 in EPS year over year. That's awesome. And revenue is looking to be $2.53 billion versus the $2.21 billion from last year. That's up 14% year over year. That's pretty good as well. So this is one that did pull back, you know, a little bit on, let me see, Wednesday, Thursday, Friday. So we sold off around 4% in the latter half of last week, which is putting the stock right above the 50 SMA. You guys can see that right here. Let me show you right here. Boom, you can see that. And if it does gap under that trend line, which is possible, maybe we go down to $2,000, $19.95, roughly somewhere in there, you know, right by the 180 SMA. I don't know, but we have earnings coming up. We're heading into a big week, and it's on the watch list, guys. CMG, Chipotle, Mexican Grill, and I was going to do 3 more stocks for this video, but we're already running a little bit too long. I don't want to make the video too long these days because, you know, the TikTokification of, you know, social media. We're not going to get into that in this video, but we're going to keep it a little bit shorter while it's already a longer video. Either way, guys, we're going to do a part 2, so make sure to subscribe, hit that notification bell, and guys, we're almost at 30,000 subscribers. We're almost there, and I think we could get there by the end of this month. All you have to do is, if you have not subscribed yet, hit that subscribe button, and you might as well get your free money from Moomoo, up to 16 stocks, each up to $2,000. All you guys have to do is use that link down below, open up your account, and fund it with at least $100. You get 5 stocks right off the bat, and if you fund your account at least $1,000, you get 10 more stocks, totaling 15 stocks. And listen to this, guys, fund it with at least $5,000 $10 on top of those 15 stocks. You also get a free share of, are you ready for this, either Tesla stock or Expedia stock, which Expedia is $120 right now, 120 bucks, and we have Tesla in the mid 200. So this is a no-brainer in my opinion, guys. Use that link down below, and of course, that is an affiliate link. It helps out the channel. I appreciate you all as always. And with that being said, cheers. I'll catch you in the next video.